what is next. Hello Adrian, and welcome back once again to another episode of the Dang Oracle. It is 7:30 p.m. UTC plus 8 is my time zone, and welcome everybody who is watching around the world. And well, today is Tuesday, and well, like I kind of had to expect it. Monday was a very eventful day, and the first round and the first the first attack was launched by the bulls on the first day of the week. So let's wait a little bit until some of the hardcore crew is joining up. Hi Nikolai. Hi Fardeen. Hi Lex. So while the people are, the hardcore crew is coming in. Hi Darway, coming in. Let's take a look on the COVID numbers while waiting. Right. Refresh this one. Hi Darren. So for the US, we are now at 2.3 million. Hi Tina. 2.3 million cases. Brazil, we have 1.1 million cases. So yeah, Brazil went up insanely quick. Hi Adam. Russia, close to 600,000 cases. India, very near now to 500,000 cases. So yeah, those are the countries that are pretty much in a big problem. So confirmed cases worldwide, we are at 9.1 million cases right now, which is quite a substantial amount of cases, right? So the US, still no difference really. Brazil, still no difference. Russia, still no difference. India, definitely not different. Peru, not difference. And Chile, definitely not different. And as you can see right now, all the countries, the top 6 countries is now USA, Brazil, Russia, and then India, Peru, and Chile. So a lot of South American countries that are entering. So yeah, except for Uruguay, who is doing pretty well. That's one of the few, we've talked about that yesterday, one of the few South American countries that are doing better. Let's put it like that. Hi Jeremy, hi Gita. Hope everybody's doing well. So, where do we start off? Well, just wanted to show you guys first this one. So apparently, I saw this on somebody who tweeted it out. The source apparently is from the CFTC, and apparently we are at the biggest net short in 9 years. So the amount of short on the S&P is currently the highest it has ever been in the past 9 years, as you can see right now. So only in 2011 we had a bigger amount in shorts right now on the S&P. So does that mean that we will have a crazy crash later, or do we get a beautiful short squeeze, right? If the shorts are insanely high, that's where the liquidity is, right? That's where the liquidity is. So yeah, hi John. So is this the moment where people are going to get completely effed over? Maybe we shall find out. Or is the S&P and the stock market going to be crashing like these bears are thinking, and they are betting a lot of money on it that the stock market is going to be crashing? Do they know something else? Do they know something more? Who knows, right? Who knows? Or these are really, traditional people who think that the market is going to be crashing, right? But as you know, for me, in my opinion, they are going to get wiped out. I mean, that's a lot of free money. That's what I'm thinking, to be honest. Because if you are looking at the charts and if you are looking at what the FED is doing, then I don't have to say anything. I of course we will have a pullback, right? We will definitely have a pullback, but like I said, for a lot of whales, I'm sure this is looking like a dangling little fruit, you know? They're like, ooh, I can liquidate a lot of shorts here. You know, like I said, when there's too many shorts on one side, usually we get a short squeeze. When there's too many longers on the other side, usually we get a long squeeze. That's how futures contracts work. So, yeah, you can take this both ways. So either they are right and we will have a major crash, or they are gonna get squeezed. That's one way or the other. But yeah, you don't have to hear it from me. We can hear it from the big president himself, and the big president is saying, we will be doing another stimulus package. It will be very good. It will be very generous. Hi, Henry. So yeah, that's the reaction 13 hours ago, or in an interview, that the president has said they are going to be doing another stimulus package. Yes, 10 trillion is not enough. We are going to be giving out more money to make sure that the economy is doing well. So, and after hearing that, of course, the stock market reacted on top of that. And what happened then? Well, you expected it already. Well, new all-time high for Nasdaq. As you can see here, we are breaking above this. So this was our previous all-time high. Wait, maybe I'll put it on the weekly chart so you can see it a little bit better. So this is the previous all-time high. We can actually remove that red line now, right? And then we made a new all-time high here. And yes, we have broken that new all-time high today beautifully, as we can see right now. And look at this. Is somebody telling me that this is looking bearish? I don't know about that. This is not looking bearish. This is very constructive, to be honest. This is very constructive. Although that, you know, of course, stocks are very high, and we are, of course, in the bullish territory on the RSI. But yeah, this looks very constructive, and I think we're gonna get higher than that, actually, to be honest. Yeah. If you would be asking me, okay, well, give me an estimation here. What do you think? You know, what is the target here that you're thinking that we're gonna get? Well, for me, this looks some sort of like a inverse head and shoulders here, something like that, right? So this is sort of like the inverse head and shoulders, and if we take a measured move from that, something like this. If we take an inverse head and shoulders from that, and then we take a move from here, yeah, that's a little bit too much exaggerated. One second. Something like this here on the head, and then, well, the body is like something like this here, something like that. A little bit higher. Yeah, something like that. So estimation 11,000 basically. Yeah, I think Nasdaq is gonna go to 11,000. That's basically what I'm thinking. Beautiful number as well. So yeah, measured move of the head and of the inverse head and shoulders makes me think that we are gonna go towards around 11,000, and of course, most likely that will be the point there where we will most likely get a pullback, right? But do I think that we will be crashing? You know, like what people are thinking? I don't think so. To be honest, I don't think so. At least, I mean, what I'm expecting is by next month we'll reach around that 11,000, and then what month are we? September. September we'll have the pullback. September, and then most likely after the pullback it will recover again. October, November, and then we have the elections, right? October, November. On the elections, we'll be back on like all-time high levels, I think, by the elections date. That's what I'm expecting. I think we're gonna have a small pullback. Yes, we're gonna have a, well, you know what I mean when I'm talking about a small pullback. The pullback is quite substantial, right? When we're talking, like I said, when we're talking about the pullback, and definitely on Bitcoin, even if during the bullish periods, it's always like 30 to 40%, right? So I do believe that we will have like these sort of like pullbacks on the S&P, where we go down like a substantial amount. Like let's say here, this is during the market, a 24% drop. That's quite substantial. Let's take a look here. Bullish drop of like 11% here, bullish drop, right? Here, this is quite a substantial pullback as well. Let's take a look how much that was. 18%. So yeah, that's the kind of range that I'm expecting or looking for whenever we reach to around 11,000 or something like that. And if we do make a pullback and for like a 20% or something like that from the 11K range, where do we get? Back here, around here. This is what I'm expecting, back to like the previous level around the 9,000. That's why I have my my green box ready there already, because yeah, I do think that that's most likely where we will be ending back after you know, reaching around 11,000, and I'll be ready. Just a retest of where this EMA 21 is at right now. Right now it's at 9,089. Of course, it's going to go back up higher, and then it's going to obviously move lower once we make a retracement to the downside, right? But yeah, somewhere around the 9,000, 9,100 area is most likely the pullback, which is like a 18 to 19% bullish pullback, right? So, and that's also when I do believe that Bitcoin is going to make that retracement as well, or that pullback as well. Very similar, we can see also very similar pattern on the S&P, of course, as you can see right here on the daily. This beautiful push above this 10 simple moving average, above everything. Looks like we're gonna be retesting this area here, our previous local high here, around the 3,185 level, and then most likely afterwards, if we do break that area, most likely we will be next month we will be retesting this area here, which is our previous all-time high. So I'll put a red marker there, previous all-time high there. So yeah, this looks very good, very good. And then yeah, once we get back and above the all-time high, I do think we will get above the all-time high. So once we get above there, then a bullish pullback, most likely. Well, this green box is not valid anymore. Most likely somewhere around here. This yellow, or the EMA 21, very similar to the Nasdaq, of course, right? So I'll put this green box here, just there, beautiful, waiting for that spot as well for on the S&P. That's basically what I'm looking at, right? So let's move this back onto the 4 hours. But yeah, so just as you can see, looks very constructive, looks very bullish on the traditional markets, which is something that I've said before already. So what happened yesterday on Bitcoin? Well, if you don't know, well, I mean, then you haven't been really following me. So basically, what I've said is, like, if we break the 9,600 area, rocket ship, and we'll most likely be heading the first green box around the 9,760, as you can see here, and we went a little bit above it at 9,795. Yes. So yeah, kind of what. Like I said, these are the spots, or the trading spots that give you very low risk and easy. Well, I'm not saying easy. We've been waiting for that fucking we've been waiting for that trade setup for a really long time. We have been very patient. But like I said, yeah, and I hope people, well, I made money, so I hope that people also made money on that move as well. So I'm gonna remove this rocket ship here because we passed that phase now already, and I'm gonna remove, of course, all these white lines here and this X mark here. Not that it doesn't matter anymore. Of course it matters. It still matters very much, right? But we have to set up our new and our next plan, right? That's what we do. We keep on making new plans. Anyways, so round one, definitely the bulls have made their point, and well, I've also said that it would be happening within. It had to happen within 48 hours, or else we would start seeing massive dumps. Because the momentum will be lost, right? But on the other hand, after just seeing how traditional market was like just keeps on pumping up, I was, like I said, rather bullish than bearish. So what is happening right now? And what are our key zones and our key areas right now? Well, right now, as you can see right now on the 4-hour, we are building some sort of like a bull flag type of structure right here. It's going slowly down, but it's being held up really well as well. And we can also see here our RSI is just super sky high right now, right on the top here. So it's normal that we get some sort of like a small consolidation, but this is very bullish, right? So it will do something like this. It will slowly go down, and then it will spike up once again. Very likely, very likely. Not sure, of course, there's no certainties in life. Not sure, but this looks very constructive. And like I said, I believe that that we will have continuation from this side, and most likely we'll be targeting this 9.9k, which is the first area where, you know, where there could be some hesitation and some struggling, because of course it's that 10k once again, right? Psychological number 10k. But I do believe that eventually we will be breaking it, because our HVP is still insanely low. So the move is definitely not over yet. And like I said, we already saw what that the first move is from the bulls, and that kind of, and just watching Nasdaq and the S&P. I mean, the probabilities are just way higher that we're gonna go up higher than that we go lower. That's just, you know, that's just how it is. And if we are doing a Fibonacci extension, I've done that before the last time as well, but I'm just gonna do it again, just from the bottom to the top and to this bottom here. Let me put the magnet back on first, so it takes the tops. This one here and this one here. Yep, we can see that the 1-to-1 FIP extension is right here at 9.9. It is, what is it, 9,882, right? And then let me remove this. Okay, there. So that's the target that I'm expecting we will be hitting most likely later tonight, tomorrow, something like that, after we have formed a nice beautiful little bull flag here. And once again, if you make a measured move from this bull flag and we break back up, it will be somewhere around around that area as well, right? It's not very pretty. Let me redraw it a little bit so it's more pretty. Something like this, right? Let's see. So measure moved of that bull flag towards the top side, most likely around that 1-to-1 FIP extension. That is where I'm expecting 9.9k-ish area, something like that, just a little bit below 9,882. So somewhere around the 9.9k. Maybe we can wick up a little bit, and I think that will be most likely our second wave, right? So if we are watching Elliott wave theory, this would be our first wave, this would be our second wave when it completes, and then most likely a pullback once again, and then towards the 1.618 FIP ratio, which is our green box on the top side here, which is of course our 10.5k area, 10.5k area. Now it's more likely to be a little bit higher, 10.4, 10.5, of course, because this channel here is moving towards the upside, and this channel here on the bottom is moving towards the upside as well, right? So some key zones, some zones are a little bit different, but other than that, yeah, I think we will be ending the week with a higher weekly higher. That's basically what I'm expecting, because we want to be seeing the potential weekly bearish divergence to be negated, and that's something that I've told you guys yesterday, and which is super important, right? Wait, let me put this back on the daily. So that is super important, right? Because yesterday, let's go back to our weekly. So this is our weekly right now, and as you can see right now, this is not good. Whenever the Stokes are super high and wanting to be curling down, that's obviously not good. But if the weekly makes a higher high, meaning above the previous 10.4k, what was the top that we had last time? 10.471, right? 10.471. If we make a higher close than that, so let's say 10,500, then of course what will happen is this Stokes is going to be curling towards the upside rather than the downside, right? Because the weekly candle close is going to be higher than the previous week. Makes sense, right? And as you can see right now, like I said, this is looking very constructive. It wants to be going up higher towards the bullish area rather than breaking down below the EMA, as you can see on the weekly. But that's a weekly, right? So week by week, day by day. But the important thing is, of course, the 3-day. We can clearly see 3-day. I've told you it's starting to look very weak on the Stokes on the 3-day, right? And also on the RSI, of course, below the EMA on the 3-day. But because of the bullish close yesterday, of course, on the daily, we closed above the EMA 21, above all the moving averages, and the bulls did what the bulls had to do, right? Closing above the 9.6K area, which is which they had to do, or they didn't have a choice. The bulls didn't have a choice, right? So we can see here on the 2-day chart. Wait 1 second, let me go back here on the 2-day chart, and that's where the 2-day chart closed yesterday. So that's the importance. And what did I tell you guys? We had to close high, because you remember yesterday when the Stokes were curling to the downside, and I told you, oh, this is not looking good, we have to make some reaction. And here, this is the reaction. It wants to now curl up towards the upside, right? So that's the first domino effect, and that's when I'm speaking to the little stones that formulates the plan, right? So we had a very good daily close that in turn formed a very bullish close for the 2-day, and then that can push back up higher, and then of course that will make the 3-day curl back up as well. The 3-day curl back up as well, and then of course what we want is to see this weekly instead of curling down, going up a little bit higher to the upside. And that's basically what I'm talking about, the domino stones and the domino effects of every daily close, right? So the small time, so when we are seeing on the macro, on the higher time frame, something being built or something potentially being built, we want to see how the lower time frames are reacting upon it. If it does confirm, because if all time frames are confirming something, you know, if the bulls didn't react, then that bearish divergence would be getting confirmed on the higher time frames, the lower time frames, and the short time frames, and then basically that would be a very big problem, right? So yeah, so I think that's the most important thing that you can see right now. Because of that bullish daily close, the 2-day Stokes are now starting to curl towards the upside. And what we also can see, and what I've told you guys also, what we have to look, does the 2-day candle close above the EMA 21? Obviously that was a given, but now it also closed above the 10 simple moving average, which is in super good. And obviously while doing that, it will create more divergences as well towards the top side. And as you can see right now, it pulled back a little bit and it bounced perfectly off where? Yes, you've guessed it, on the 10 simple moving average on the 2-day chart. So as long as we hold this level and we do not break below the previous support level, then yeah, continuation is the name of the game. Continuation is the name of the game. And we can see it here as well on the daily, of course, now above all the moving averages, right? So looks pretty good, right? Looks pretty good. Yeah. So yeah, so that first step was super important, and yeah, this looks really good. I mean, I don't know what more to say. It looks really good, and the VIX is going down as well. So the traditional markets is most likely going to keep going up as well. Anyways, so what am I expecting? Like I said, most likely 9.9K later in the short term, and then most likely 10.4, 10.5K by the end of the week. That's what it looks like. And if we are looking at all the momentum indicators and this and that, like it looks really good. So we broke out of this channel here. On the daily, we can clearly see here. As you can see here, we broke out of that falling channel, and then we break back up here. Where are we on the wick of pattern? Well, we can take a look there. We are right here. It means that we are not. We haven't gone to ellipsi just yet. So if we go to like here and we get rejected, you know, for example, what would be a possible scenario is we go to like near 10 point, let's say 10.2k or 10.3k. And we get rejected there. That could be a possible LPSI, Nikolai, because we would then, like I said, this is the key part, the bearish divergence on the weekly, right? The bearish divergence on the weekly is really the key part. So let me draw it again. So we have here a higher high, and on the RSI we have a higher low. A lower high, sorry, a lower high, a higher high versus a lower high, which means bearish divergence, right? But if this line goes up higher, of course, then that would, wait, if this line goes up higher, let me draw it, goes up higher, and then our trend line would become something like this, right? Sorry. Let me delete the previous one. Then it would become something like this. Of course, a higher, but then this one, the RSI would be going higher as well, and then the bearish divergence is negated. If you understand what I mean, right? So the bearish divergence would be negated. But if this does not become a higher high, then the bearish divergence would be getting confirmed, right? So it would be this would be getting confirmed. This part here would be getting confirmed, and this would not reach to the higher high, so it would curl back down, something like this, and then this RSI would just curl back down as well, and then we would have bearish divergence on the weekly, and that would be not good. That would be not good. Then we would get a pullback, right? Then we would get pullback. So if we are looking at Wyckoff, if we would get rejected, if we don't get a higher high on the end of the week, most likely we will get a LPSI. That's basically what is probable. So let's say we move up a little bit higher and then we get rejected, and then it will go something like this. The possible UTAT is also right there. UTAT would be like I said, 11.5k. We go all the way, we get all the hype and all the FOMO in. And then we get that retracement to the downside. But yeah, let's see. Like I said, we have to take it step by step, one step at a time, day by day, basically. But right now, obviously, I'm quite confident that we are going back to like 10 point the higher box. Basically, I'm quite confident that we will most likely be breaking this box here, and then eventually go up here towards this box here. The question is, and that's really the main question, the main question is, do we break this here and then go all the way towards the 11.5? That's basically what I'm waiting for it to see. But yeah, as long, I mean, if I hear that they are keep printing money, if I hear that they keep pushing the traditional markets up, and we'll see, right? We'll see when, like I said, I'm still expecting Nasdaq to go to like 11,000, something like that. Crazy, but that's what I'm expecting. And everybody who is like a trader right now in the traditional markets, traders, they feel like they are a genius because they're just making money on a daily basis every day. Every day they're making money. Just have to buy the bottom, buy the dip, and you make money. So, like I said, it's creating a lot of wrong expectations, let's put it like that. But yeah, and then of course the hammer of Thor is gonna happen, right? Well, not really the hammer of Thor, a little pullback, little 20% pullback on the traditional markets, or a little 30 to 40% pullback on the Bitcoin market. But it's kind of normal. Anyways, so that's a little bit too far ahead for me right now. What I'm looking for is right now is so later today, tonight, I do believe that if we are holding up this zone here and form some sort of like a nice bull flag here, I do believe that we'll be testing breaking that zone and going all the way up towards the 9.9k ish area. 9.9k ish area. That's basically where my mind is right now. And then afterwards, most likely a pullback, and then continuation, most likely towards this green box here, towards the top. And then we'll have to be very, very careful and analyze and be patient once again, because that's the zone, that's the zone where things are, where things can go wrong. Let's put it like that. But if we are looking at the HVP, it's still insanely low, right? Like we can go over to our HVP right now, because we just closed the 12-hour candle close. 1 second, I just want to check. So ranges, in terms of ranges, obviously 9.9k towards the top side, and then on the bottom side most likely 9.4k or something like that. Our previous the two green boxes where we are in right now, that's basically what I'm expecting. Okay, so first standard deviation to the top side is actually a little bit lower than I expected, 9,742. And the one to the downside is 9,506, which is on the bottom side, on the first standard deviation on the bottom side. And as you can see right now, it is angling a little bit towards the downside rather than the upside. But I think this is just a little breather, before we move back up more, to be honest. If we are looking at the Stokes on the 12-hour, as we can see, finally it confirmed. Remember, we had hesitation during the weekend at this spot here, where it kind of like wanted to go down and want to be breaking up, and I said, this is kind of like the key moment on Monday when the markets are going to be opening. Do we break this line, yes or no? And since that we have broken it, most likely it will go towards the upside here, and that's most likely where we will be getting if we are going towards that 10.5k ish area. So that's what I still expect, of course. Take a look on the RSI. RSI is very high as well, and it will only cross down, of course, below the 9.5k. So 9.5k is really the key area right now, right? So when would I be saying like, okay, things are not looking that great? Below 9.5k. So if we are closing a 4-hour candle below 9.5k, I'll be out of my long. I mean, that's where the scenario stops, right? You always have to be thinking about the negative or the bad scenario as well. Don't think that because everything is looking good right now that things cannot go wrong. I've seen everything already while trading. So although everything looks very, very creative and everything looks very, very good, but always make sure that you have your risks managed, and you make sure that you're well covered with your strategy and your plan. So just looking at the 12-hour RSI, it confirms here. If we close below 9.5k, not good, right? So makes it easy for us, right? 9.5k. If we close the candle below that, it's over. It's just as simple as that. Close our position, our long position, let's put it like that. Let's take a look on the daily up on the RS there. This is what I mean. Remember when I said, it broke down below this support trend line, it has to be moving up really, really quickly. And as you can see here with that push it got here, and we are back towards curling towards the upside. And of course we need to have confirmation, right? So it can't hesitate too much and go back into this wedge ascending triangle type of structure. So that's what we're waiting for. We need to have confirmation, and we need to be pushing towards the upside to complete it. As we can see right here, HVP is still insanely low. Simple moving averages are really, really contracting. So the big move, the real big move still is ongoing right now, and it can happen, to be honest, any time now, any time, most likely this week, to be honest, with the expirations of the billions of options and so on that are closing. So It will most likely be this week. Anyways, yeah, RSI is still above, and once again crossing down at 9,504. So yeah, pretty much it. So, and well, for the record, for the people who don't know the expirations, 95% of the open interest from the professional traders are all long. So that's the danger, right? So there can be a huge long squeeze, right, to fuck over all the people, or they can really use all the capital to reach as high as possible the top, so the when the contract expire, they get a ton of profits, right? But like I said, I side with the professional traders, and I side with the long positions right now, just because traditional markets are doing insanely well and money is just being pumped in like crazy. So I don't think that that they will let the expiration to be running really bad. And then you also have to understand the next effect, right? So when people are making a lot of money, and to be honest, all the retail traders who have been trading traditional markets, and who have been opening accounts on all these retail markets, because during the lockdown, the amount of people trading has been increasing very substantially. And as you can see right now, during the lockdown run, we only went up in price, and people are making a ton of money by trading. And of course, they all think that they are geniuses because they just buy the dip and they just keep making money, right? But that also creates the effect that whenever you make money, and definitely when you're retail and not a professional trader, you will start to take more risk. You will get more greedy. You will get more, you will want to make more money, right? And you think that you're really amazing and really good. And that's where things go wrong, of course. But like I said, if 1 billion is going to be expiring and they will be making a lot of money on that 1 billion, obviously, that money is going to be flowing somewhere else again, right? When people make money, and definitely traders, they make money, they reinvest. They just take larger positions. They just they just go crazy, right? Like that kind of stuff. So you have to understand that part as well. So when I think that the contracts are going to be expiring and people are going to make a lot of money, I think they will put it in more stocks. They will put in more Bitcoin and this and that. So I think price is going to keep going up until at least next month. That's what I'm expecting. And on the TA perspective, that's what the charts are currently telling me, right? So yeah. I am still bullish until I see, of course, what that's all psychology. I'm just still bullish until I see some sort of like a reversal on the price. When price action is telling me like, okay, well, this is not good, then then I'll change my mind. But until then, still bullish. Okay, let's take a look on the short term. On the 4 hours, stocks are curling down right now. Like I said, we were pretty high up there at 9.8k. Like I said, the first green box on the 4 hour, it's normal that we are curling a little bit down. It's just taking a little breath, and then most likely we'll be going back up more. That's what I'm expecting right here. It's going to get supported by the RSI right here at which is currently at 9.6k, and then most likely push back up higher. I mean, I don't think this is gonna go down immediately or anything like that. So most likely later tonight, ranging between I would say like the lowest point that I would be thinking would be 9,560. I think maybe we get a wick down there, 9,560 maybe there, and then complete our bull flag. But I don't think it will go lower than that. If it does go lower, then we kind of are fucked in our long position, right? If it does go lower, but yeah, I don't think it's gonna go lower than that. but let's see, right? Let's see. I don't I don't think I I don't believe it, MA63, that the coronavirus reality hits the market theory. Like I said, the stock market has zero correlation or very low correlation with the economy. So therefore, it is a separate thing, and I don't think that the coronavirus really is going to be hitting. The only reason why the stock market and everything went down and crashed is because of retail, basically fear, right? Because of fear, not really because of the effect, the actual effect of the coronavirus, because people were just scared. That's basically it. Yes, Tina, you can actually put Bitcoin on several platforms, and you can earn interest on your Bitcoin as well. There are several platforms where you can just put your Bitcoin there, and on a I think monthly or daily basis you get some interest on it. But yeah, the best thing is to be trading it, and then you'll make the most out of it. Hopefully you'll make the most out of it. But anyways, so yeah, where was I? Oh yeah, another thing that we have to be that I wanted to show you guys is, of course, this the hash ribbons. So as we know, we had that capitulation phase when after the halving, a lot of old machines had to be going down, right? Here, and we had that capital, and as you can see right now, it's curling back up, and it's almost, as you can see, almost in the positive right now, which means the capitulation phase for the miners is almost over as well. So when miners are back to the normal and everything is back to normal, there will be a lower amount of bitcoins that is going to be sold on the market. So that's actually a very positive thing as well. So yeah, once again, that kind of confirms that more bullish trend as well. And then other than that, this is probably the most crucial thing that I am looking at, and this is the crossover between the EMA 21, so this yellow line here, and the simple moving average, the 50 MA. And you can backtest it. This is one of the most proven crosses in terms of results. And whenever we have a cross from the yellow downwards, so crossing down of the 50 simple moving average, we always get a very strong continuation of the downtrend. And as we can see right here, so price went down, we got the bearish cross, and then continuation of our downtrend towards the downside, as you can see here, right? The opposite, we had a positive uptrend here, and then we had the bullish cross. So the yellow line crossing the simple moving average, the light blue or gray line, I think it's light blue line, and then it goes a continuation towards the upside, as you can see here. So maybe I should remove or not display these averages, so it's easier for you guys to see. So it's just this one, this one, this one. Oh, sorry, this one, these two lines. Yeah, just these two. No, I got this one also. Let's move this one. Okay, there. Beautiful. It's very clean right now. So yeah, continuation of the upward trend. Once again, let's take a look here. We had a bearish cross here, and as we can see here, we were in a downtrend. Then we had the bearish cross, continuation of our downtrend, and of course, major crash, right? all the way back here. Here we had an uptrend, then a bullish cross, the yellow line crossing the white line, let's call it the white line, and we had continuation of our trend going upwards, right? So as you can see, it's one of the most proven crossovers that you can think about on the weekly. So you can backtest it, and you can see it, right? So what am I looking at is exactly this right here. And as you can see right now, this is it. We are super. It hasn't happened just yet. As you can see, it hasn't happened just yet, but it can be confirmed this week. I mean, at the next weekly close. So it's the EMA 21 with the simple 50 moving average. Here. So yeah. So next week, it can basically confirm it. This can be our crossover towards the upside, and this can go down here, something like this, and then yep, that can make the bullish cross. And then what does that mean? Continuation, of course, continuation of our trend, and that will basically confirm if we are continuing to go up, or if it gets rejected here. That would be really sick if we get rejected here next week, and then of course towards the downside. That's just but yeah, by next week we will basically we'll know if the trend is going to be going up, continuation of our trend towards the upside, or rejection towards the downside. So that's the cool thing about this moving average. So I take a lot of importance on this. So yeah, what I'm saying is just next week, if the price doesn't break, so what needs to happen for this cross not to happen is, of course, the price has to be below one of those two moving averages, so below 8.6k basically. So if price dumps back below 8.6k, and that's $1,000 from here, it's $1,000, quite far away, right? It's really far away. So I don't think it's going to be happening, but you know, we still have a lot of days, right? I still have a lot of days. a lot of days. So it's yeah, we're only Tuesday right now, so we still have a lot of days going. But if price goes below 8.6k by end of the week, then this cross will be not confirmed, and it would be a big problem. But if the price is above, if it's here at 9.6k whatever, or 10k or something like that, obviously we will have that bullish cross, and then most likely we will have continuation of our trend towards the upside. And like I said, this kind of gives me that will basically give me a confirmation that we will go up a lot higher than what we are expecting, right? So just to give you an example, what happened during this bullish cross here. After this bullish cross, we actually went up, let's see, from this spot here to this spot here, we went up 150%, right? So that's not too bad. Let's see, let's for fun just do the 150%. Where would we be ending up at? 150-ish%. Yeah, it's 155 to be exact, something like that. 13,500. So if we do exactly the same amount, we would get to around 13,000 in Bitcoin if we get that same push up towards the upside. Right? That would be pretty nice, wouldn't it? Right? But yeah, one step at a time, of course, one step at a time. But yeah, for now, it hasn't confirmed just yet. So as you can see here, it hasn't confirmed just yet, but next week it can confirm this bullish cross, and then we're off to the races. And like I said, with all this pumping and with all this money printing, I think it's really hard for us to be going down. I think now is really the time to be to be going towards the upside, and we have all the possibilities and all the chances right now. But yeah, like I said, we just take one domino stone at a time, and just see how things go. So I can remove these two prices because they are less of an importance right now, of course. So what are we looking at? Short term, like I said, I do believe that we will be forming some sort of a small bull flag here, something like this, and most likely we'll be breaking up towards this 9.9k, most likely tonight, tomorrow, something like that. That's basically what I'm expecting. But crazier things have happened, and if we do break down below this area here, below this green box here, or the 9.5k, I do think that the move is over. The move is over, and we will most likely be heading down again before we would have to reanalyze a lot of things, and it would actually not be good if we break from this area right here. So a wick down would still be okay towards like 9,560 ish, but completely breaking this pattern of this bull flag that we are currently forming, that would be very, very bad, and yeah, I would be stopped out of my long position that I'm in right now. That's basically where my risk management goes, right? But other than that, yeah, I do believe with all the printing and this and that, I do believe that we'll be going towards this 9.9k area at first, and then most likely afterwards we will be taking that after a little pullback once again towards this 10.4k or this green box, 10.4 or 10.5k, or this green box on the top of our zone here, or on top of our channel here. And that's when things become really, really important or interesting. But I think we will get there by end of the week or something like that. So and then if that negates the bearish divergence, then it will be good. Money printing can bring us to very, very high, to very, very high, Nikolai. So to be honest, I think we will have a pullback when we hit like 11.5k. But the question is, do we get like a small pullback, or do we get a big pullback? It will really depend on what the traditional markets are going to be doing. But like I said, we just take it one step at a time. We're nowhere near that area just yet, right? We're nowhere near that area just yet. So why rush things, right? Why rush things? We can plan and prepare everything when the time comes. I'm in a long from 9.6. Well, I mean, yeah, maybe explain. I think I said it yesterday, right? So I was waiting for it to break here, 9,525, and then I just entered a small position there, and then I took profits here at 9,750-ish, something like that, on that first green box here. Something that I've also said yesterday, that would be my first target, but I just re-entered at 9.6. Around 9.6 is my entry right now, and then I'm just waiting for it to go to like 9.9. That's basically a secondary entry, but already got a little bit of profits, obviously. Yeah, I think constant. I don't think you want to have the whole world or the whole economy to be collapsing to have cheap bitcoins, to be honest. I mean, that's not really how it works. To be honest, that's not how it works. The problem is, I'll give you an example. Let's say Bitcoin becomes $100,000. That's a beautiful number, right? $100,000. But because of inflation, $100,000 you can only buy a bread or something like that. Then that number of being worth one Bitcoin being worth $100,000 is just one bread, and that sucks. That's not what you want to do with one Bitcoin, right? So what doesn't the nominal value of Bitcoin is not what matters. It's the purchasing power that matters from Bitcoin. So if we have mass hyperinflation and you can do less with your Bitcoins, but the number in US dollars is higher, then it's bad for Bitcoin, if you understand the logic behind it. And that's kind of what happened in for example in Turkey or in Argentina, in Venezuela, also in Argentina, but in Venezuela as well. So what happened was, you could buy a bread. The normal price was like 100 lira for one bread, and the next day it was 200 lira for one bread, and then the next day it was 400 lira for one day, and then the next day it was, and so on. But the problem is that so if people were exchanging it into Bitcoin, the one day, one Bitcoin was of course like a million lira or something like that, but they could do less with that one Bitcoin than before the hyperinflation. So what I'm trying to say is hyperinflation is not really a fun thing as well. So there's a lot of people who kind of, I don't know, like it's like a fetish or something like that, that want to see the world crash and burn, or the economy crash and burn. I don't really want to see that, to be honest, and I'm an economist, so that's my background. So yeah, I mean, it sounds good, but like I said, if we have hyperinflation and you get for one Bitcoin $100,000, which sounds really, really good, but with that $100,000 you can't do shit, then that one Bitcoin is still useless, right? If you understand what the logic is behind it. What you want is, of course, the value of whatever you can do with your one Bitcoin to be increasing, your purchasing power to be increasing, not the nominal value. Ooh. Yeah. So yeah. Do I think that we will make a move today? I think we will make a move today, to be honest. It looks like traditional markets are pushing forward, pushing up. Nasdaq is the leading indicator. It's pushing up. I think a small pullback, and later tonight, most likely, when the traditional markets are opening up in like an hour, when the New York Stock Exchange opens, I think it's go time. I think it's go time. But yeah, nothing is guaranteed, of course, right? Nothing is guaranteed. Yeah, I think that's it for today. We've near our 1 hour, and that's when my voice becomes a little bit raspy. So let's wrap it up. Short term, I think we are building a nice bull flag here. We might hit one more time towards the downside, towards this 10 simple moving average, a test of the 10 simple possible, not a guarantee or anything like that, at like 9,560. I don't really think that we'll be going lower than that, but at one point I do believe that we will be breaking this towards the upside, the bull flag, and then hit towards somewhere around the 9.9k area, which is where my initial target is, and which is what I've been talking and saying all along for now. Other than that, you have to have a stop loss. You also have to have an idea, and that's 9.5k, which is the EMA 21. Of course, if we break that EMA 21, this would be a failed breakout, right? And then then this would be a higher low once again. I'll show you. So this would be something like this. Ta-da! Do you see this? High, lower high, lower high. Oh my God, we're going to hell. That's basically what I mean. So that's the reason why my stop loss is at 9.5, because if we do this, then it's a failed breakout. And it will be a lower high once again, and then we will be doomed. Because then most likely, like I said, our bear scenario is going to be activated once again. Where will I be switching over into a bear or in a short? I'm not going to be shorting immediately here on this area, because I do believe that even though if we get back to this zone here, my bullishness will be a little bit gone, but I do believe that we will have like a small bounce once again before we head down. But at that point, if we do break here, this zone here, or go down here and then bounce back up, I will be looking for shorts, but I will be waiting for that bounce first before I'll be entering a short or anything like that. So we'll be analyzing that a little bit later on. But I'm just putting it out there. But yeah, like I said, too much money printing. But this scenario is definitely real, right? If this is a fake breakout, and we don't break up from this resistance line, we have 1, 2, 3 lower highs, so then definitely bearish, right? Definitely bearish if we don't break out. So once again, like I said, the bulls are on the clock. It's just how it is. The bulls are on the clock. We have a week to negate that bearish weekly divergence. We have a week, and it kind of has to happen this week. If not, things are not looking good. But HVP is still very, very low. Everything and all the formations, everything printing and traditional markets is going up. I can't be bearish. And the real dang oracle is awake. So I'll leave you guys. I hope to see you again tomorrow, same time, 7:30 p.m. UTC +8, Facebook Live, on YouTube Live. Please leave messages, comments, whatever you want to do with this channel. And yeah, speak to you again tomorrow. And of course, please stay home, stay safe.